Hey everybody, today I want to talk a little bit about assumable mortgages. So there's a lot of questions that I've been getting. I wanted to make this quick video to help you understand how assumable mortgages work and what the advantages can be. So most typically it's done for veterans. VA loans are all assumable. So this is when it most often comes up, but check with your mortgage note or your bank, your lender, whoever you're making your mortgage payments to, and they will let you know if the loan that you have is assumable. And that can be a great thing for both sellers and buyers. So if a buyer comes in and they are able to qualify to take over the mortgage that you have on the home that you're selling, they can benefit from the interest rate that you had when you had that original mortgage, and they don't have to get a new loan. Maybe the rates have gone up in the current environment, rates changing very fast. So this is becoming more and more of a question that people are asking. But the follow-on question that I get is, how do they make up the gap between what they're selling the home for and the seller's mortgage that they currently have? Can we get a second loan? Can we get gift funds? And the answer to both of those is yes. You can get a second loan or a home equity line of credit, and that'll help bridge that gap. Say that, for example, somebody's selling a home for $500,000. They have a mortgage on it still for $300,000 that they owe with a really low interest rate. So the seller is willing to go through the process of having that loan assumed by the buyer. Not really a hard process, but we just have to make sure everybody's on board with it and everybody understands what those requirements are. So now the buyer qualifies to assume that mortgage, but if the mortgage is $300,000 of selling the home for $500,000, then how do they bridge that gap so they can come in with the minimal down payment if that's one of the goals? So they can get a second loan. They can qualify for a home equity line of credit. Usually that can be up to 90 or 95%. So there's still just 5% that needs to come in. We can't do 100% financing this way, but there's some creative ways we can use a second loan or gift funds to be able to close that gap for the buyer so that they can take over the loan. They can assume that loan, but they can also come in with the minimal money down. So let me know what questions you have. Hopefully this sparks some interest and gets you thinking about some creative ways that we can put loan structures together to help everybody get what they want. Thanks. Bye-bye.